Good. Please sit down. Take your seats. Good morning. I could not hear your good morning. Yes, let's start the day well. So let me thank the organizers for putting together this program. It's an important one. It's good we engage in the debates. And for us at the Central Bank, we encourage these. Yesterday, we had a good meeting with the fintechs that are involved in the remittance business. And I believe that that approach is more efficient. We listen, we hear you, and together we agree on the reforms. It should not be top down all the time, but it should be consultative. Let me assure you, this is the approach we are going to use going forward. So more of these debates. Anytime you put it together, we are happy to be part. Now, when I got in here this morning, somebody asked me, Mr. Governor, I want to ask you what you have been doing since you came in. And I said, yes, I welcome that very much. It's about 5 months now in the job. Remember, we came in at a time when the IMF program was actually, off track, virtually, derailed. Inflation was very high, if you remember, over 24%. The exchange rate was out of control. There was so much uncertainty. As a matter of fact, when we had the first meetings with the IMF team, there was a lot of pessimism. There was thinking about, should we just cancel the program and start all over again? But we decided to take the bull by the horns. And I believe that in the last 5 months, we've taken some very, very major decisions. Decisions that underscore the progress that we are seeing now. And so therefore, there should be no doubt about sustainability. Somebody asked me, do you think you can sustain the stability of the exchange rate? And I said, have you read the background data? These things should be informed by the evidence. Everything is out there in our statements. If you go to after MPC, we'll put out lots of data. But it appears in Ghana, the way we form our expectations when it comes to the exchange rate is to listen to the Zamna man, is to listen to the Alaji in the corner. And I think that's where the problem is. If you have a country whose trade surplus has doubled compared to last year, if you have a country whose current account has increased from a mere $66 million last year to over $2 billion in the first quarter of this year, why are you surprised when the exchange rate is showing stability? And so my point is, please look at the data, the media. Focus on the data. When you are forming your projections about the exchange rate or whatever variable, look at the data. It's all there. But you notice that in Ghana, we say the exchange rate is going down, and so it keeps going. It keeps going. You notice that trend? And I kept saying that no. When it moves, it's actually protecting the country against external shocks. And so it must move. But it appears it's all about what somebody thinks, and then we all go in that direction. So tomorrow, the moment the Zamra man says, hey, the city will start appreciating again, then everybody starts liquidating. If there's anything I want you to remember this morning, is that tell people that these things are macroeconomic variables. They are driven by macroeconomic factors. So just look at the data. And we churn out a lot of this data. We update it all the time. Use that to form your projections about the exchange rate. And if you do that, I believe there will be no doubt in your minds. I have some prepared speech here, so I'm going to read through it. I'll give you some figures to underscore what I'm saying. But again, I cannot emphasize it enough. The way we are forming expectations in this country is not the best. It's all about what somebody thinks, what somebody says. It's never about what does the data say. And that's what I'm saying. If a country's external sector is so strong, why do you have doubt about the exchange rate? Right? The level of international reserves is over 11 billion. Right? Over 11 billion. It's now at 4.8 months of imports cover. And the press is arguing about how much intervention was done in the first quarter. And I'm like, they don't have anything to talk about? Talk about what the figure is now. You have over 11 billion, dollars. Compare that to what it used to be. 4.8 months of imports cover is no joke. Under the fund program, we were expected to build up international reserves to the tune of around 400 million by the end of June, for the first half of the year, end of June. Under the program, we were required to build up around 400 million. But do you know how much we built up in that first half? 1.6 billion. So why don't we talk about that? But rather talking about, did we pump 1.4 billion into the markets? And I'm like, please, can we raise the argument? Can we raise the debate? It's about what it is now. And talking about our interventions, many people don't understand what we do. We ensure that we are not using our reserves, right, to support the market or whatever it is. But about the Gold for Reserves program. Formerly, the gold business, for example, those export revenues used to accrue to commercial banks, right? But under the gold board arrangement currently, those flows are accruing to the central bank. So it makes sense to support the markets. Where is the sin in this? It's just we have to support the market because it's as though we've taken over flows that were going to the markets anyway. And so that is what we do. So my point is, look at the data, please. Read about our external sector performance. Look at projections going forward. And that should inform whether it will be sustainable or not. So permit me to quickly run through my prepared speech. Unfortunately, I'll have to leave by 15 minutes to 9. I have to be out of here. But let me introduce some of my advisors who are here with me. They will stay with you. They will join the debate. They will join the conversation, and they'll bring back a report for me later. Dr. Kwachi is one of our advisors. Dr. Kwachi, you want to wave? Please acknowledge him. He is helping us on monetary policy. And then we have a member of the Monetary Policy Committee, Professor Texan, seated right by his side. We also have Mr. Belnier. Some of you who have served in the industry would know him. Mr. Belnier used to be the head of banking supervision for many years. He paid his dues, but we decided to call him to come and, assist on issues about financial stability. Gentlemen, thank you for coming. So, distinguished colleagues, Managing Director of Graphic Communications Group, Chief Executive of Stanbic Bank Ghana, invited guests, ladies and gentlemen. I will begin by commending the graphic business and Stanbic Bank Ghana for yet another timely and thought-provoking edition of this flagship breakfast series. This platform has become a vital part of our national economic discourse, where ideas are tested, where assumptions are challenged, and where the policy-business interface is strengthened in the public interest. So your theme for today, that is sustaining forex gains, business economic impact. This theme could not be more relevant. The theme reflects not only the macroeconomic transformation that is underway in Ghana, but also the central question on many minds. And the question is, can the recent strength of the Cedi be sustained, and how it would be translated into meaningful business outcome? So again, as I said earlier, it's not about the strength of the Cedi, because it cuts both ways. Our objective is to ensure that in real terms, the Cedi is not misaligned. So whether it is coming down or going up, we monitor what we call the real effective exchange rate. That is what matters. And at every MPC, the graph is shown. We, analyze it, we scrutinize it to make sure that we are comfortable about the positioning of the exchange rate. So we don't just let it go where it's going. We are watching something behind it. So, colleagues, the Ghanaian economy has over the last 3 years endured extraordinary shocks ranging from the domestic debt exchange program, as you know, all the way to global financial tightening and fiscal slippages driven by excessive borrowing. These events tested the very fabric of our macroeconomic architecture. As you remember, inflation soared, the currency weakened sharply, and public confidence wavered. But since we came, and through decisive reforms spanning fiscal, monetary, and institutional, we have reached a critical turning point. Today, the Cedi has not only stabilized, and I did not say strengthened, stabilized. It has strengthened significantly, supported by robust external buffers, prudent monetary policy, coordinated fiscal consolidation, and renewed investor confidence. We now have to move from stabilization to sustainability, and from headline gains to real sector benefits. And that is the heart of our conversation this morning. So let me begin by outlining the facts. And as I mentioned, this type of conversations should be based on the facts. The local currency has appreciated by over 42% year to date, that is as at end of June 2025, and has reversed nearly all the losses that were incurred in 2022 and 2023. Our gross international reserves now stands at $11.1 billion. And as I said, accounting for about 4.8 months of imports cover, which is up from 8.98 billion at the end of last year. We recorded a trade surplus of 4.14 billion in the first 4 months of 2025, with exports growing by over 60%, mainly from gold, cocoa, and oil. And I must admit, given the vulnerabilities that arise when your economy is virtually based on the exports of raw commodities, then you have to take measures to protect against the shocks that could arise. And let me say that we are currently working on a price hedging program, such that even if gold prices ultimately suddenly fall, we are able to limit the consequences therefore. Now, the current account surplus improved significantly to 2.12 billion as at the end of the first quarter of this year, and you can compare that to a mere 66 million during the same period last year. On remittances, inflows remain resilient, even though we have noticed some decline from April, and the Ghana's IMF supported program has passed successive reviews. As you are aware, the fourth review was just concluded. We have had our sovereign credit rating upgraded, which was very welcome news. We are sure that before the end of the year, there will be further upgrades, and ultimately we should be ready to reopen to the international capital markets. Now, these outcomes represent more than just statistical improvement. They are a restoration of macroeconomic credibility, the kind that markets, that investors, and that citizens respond to with confidence. So, how did we get here? At the Bank of Ghana, we maintain a firm disinflation stance since we came in, raising and holding the monetary policy rate at 28%. We conducted active open market operations to absorb excess liquidity, and we enforced discipline in the foreign exchange market through structured FX auctions and forward guidance. One of the things we have introduced is greater transparency to what we do. And so for the past MPC sessions, we've welcomed a number of stakeholders from out there who want to observe what we do. And I must admit, what we do is highly technical. It's much more than a lot of people think of. And I remember the last MPC, we invited the president of GUTA. Did I hear he's here somewhere? I'm told he's here in the hall. He was there with us. He went through the 2 days of deliberations and arguments and all the presentations. And then for the first time, he understood that even if we say inflation targeting, it doesn't mean we do not analyze real sector data. The name inflation targeting is actually a misnomer. It doesn't adequately capture what is done under the framework. We analyze all sorts of data, all sorts of data. And if he's here, he'll bear testimony. At the end of the 2 days, we asked him to make a comment. And he said he never knew this was what, took place inside our meetings. So we are welcoming more groups. If you want to attend, if you want to observe, you can attend. You can ask questions. You participate. The only thing you don't participate in is when the MPC members are voting to make a decision. That's when we ask you to leave the room. We are transparent. We want to enhance the efficiency of our monetary policy, and we welcome all manner of stakeholders. This time, I believe the Association of Ghana Industries are going to be part, as well as several others who have written to us. NDPC is going to be part. And so, if you want to be part, on condition you won't be covering the arguments real time, you are welcome to just sit in for 2 days and observe. Okay, so what we are witnessing so far is the power of synchronized policy execution, where the central bank's inflation targeting mandate and the government's expenditure rationalization converge to restore credibility, stabilize expectations, and anchor the cedi. So therefore, the result, a steady return of portfolio inflows, and we are observing that, a revival of domestic confidence in cedi-denominated assets, and we have officials from the Ghana Stock Exchange here to bear testimony, and we have an uplift in a number of real sector measures, the Purchasing Managers Index, our Composite Index of Economic Activity. They all bear witness to the fact that the real sector is equally recovering. Now, while the cedi's resurgence is commendable, it must not lull us into complacency. Sustaining forex gains is a far more complex task than achieving them. It requires anticipating headwinds, managing contradictions, and addressing deeply embedded structural challenges. So we know that there are risks. First, the risk of volatility remains real and persistent. Our current account and reserve strength are still largely dependent on a few commodity exports, as I mentioned, talking about gold, cocoa, and oil. These sectors are highly vulnerable to price fluctuations driven by factors beyond our control. For example, gold prices, which have significantly boosted our export earnings, are currently above 3,200 ounce, influenced dollars per ounce. And these are influenced by geopolitical uncertainty, including the recent Iran-Israel conflict. But while beneficial for now, colleagues, a future correction in prices could quickly narrow our trade surplus. Moreover, Ghana's import profile is heavily skewed towards energy, capital goods, and essential commodities. And this creates seasonal forex demand spikes, particularly in the second half of the year. So without diversification, even small shifts in global sentiment or commodity cycles can trigger renewed pressure on the cedi. And as I mentioned, we are entering into a hedging program to be able to stem some of these risks that may arise in the future. The second challenge, colleagues, is behavioral, and I spoke about that in my introductory remarks. Colleagues, we are still grappling with a deep-rooted culture of dollarization. Too many businesses continue to price in dollars, in real estate, education, and luxury retail, despite transacting entirely within Ghana. And this practice not only violates legal tender laws, but also undermines confidence in the cedi. Even more concerning, colleagues, is the mismatch between forex inflows and domestic reinvestment. While export receipts have risen, a significant portion is either held offshore and not channeled back into productive activity at home. So Ghana's formal savings rate remains low, and our export value retention, particularly among SMEs and in the informal sector, is far below potential. Then there is the policy dilemma. As I mentioned, a strong currency improves terms of trade and helps lower inflation. But prolonged appreciation can hurt export competitiveness, make Ghanaian goods less attractive abroad, and slow the industrial recovery. And it's for that reason that we monitor movements in the real effective exchange rate, not the nominal exchange rate. The Bank of Ghana must therefore walk a delicate line, like we do, managing forex strength without over-tightening liquidity, which could suppress private sector credit and stifle the very growth we seek to encourage. This balance is not static. It requires constant recalibration based on evolving data and market behavior. And for us, we monitor these on a weekly basis. Monday afternoons, we have an economic policy coordination meeting where we assemble all the data. So yesterday in the afternoon, we had that. And that's how come on a weekly basis, we can tell you what is happening in the economy. So it's all about the data. It's evidence-based. So let's all base our projections, our perceptions, whatever it is, our doubts and our fears, let it be based on the data. What does the data say? Not what the Alaji says, not what the Zamanama man says, please. So, colleagues, it's not enough to stabilize the cedi. The real measure of success is whether we can translate forex stability into broad-based economic transformation, one that empowers businesses, creates jobs, and lifts the productive capacity of the nation. So let me offer 4 priority areas where the conversion must occur. First one is to strengthen FX retention and circularity. We must increase domestic retention and circulation of forex earnings, and we are taking steps in that regard to ensure it. Exporters should be encouraged, not coerced, to reinvest their earnings locally. Tax incentives, preferential credit access, and public procurement schemes can be linked to evidence of local reinvestment. We must also improve the ability of formal SMEs to earn and retain forex through digital channels. This includes fintech-driven cross-border platforms, digital trade finance tools, and transparent export documentation systems. If we empower SMEs to participate directly in international trade, we broaden the forex base and we reduce concentration risk. Second, Ghana must move beyond raw commodity dependence, as I mentioned. In cocoa, as we all know, it is time to scale value-added processing, the branding, and retail export chains. In gold, we must accelerate efforts towards in-country refining and bullion storage. And steps are on the way to push that agenda also. And in oil and gas, investment in the petrochemical industry is now a clear imperative. So beyond commodities, we must invest in non-traditional and services exports. Ghana has an untapped edge in information technology, in digital finance, in education services, in architecture, and in our creative industries. Lots of potential abound. With the right regulatory support and market access frameworks, colleagues, these sectors can generate stable forex, create high-quality jobs, and diversify our revenue streams. Third is to enhance FX market efficiency. We must build a more efficient, transparent, and liquid FX market. And in this direction, the Bank of Ghana will continue expanding its FX forward auctions while encouraging the development of basic derivatives markets that allow businesses to hedge currency risk. We encourage financial institutions and corporates to explore hedging instruments such as swaps and forwards to better manage forex exposure than we are doing now. These tools are not only risk mitigators, they deepen market sophistication and they reduce. In other words, we must support Cedi dominance and de-dollarization. This involves enforcing our legal tender laws, and this will be stepped up by us very soon, especially in sectors where FX pricing has become normalized. That should not be normality at all. The ongoing rollout of the ECD will be integrated with retail payment ecosystems to ensure that even in the digital economy, the Cedi remains central. This effort started a couple of years ago. We intend to push forward the agenda. A number of pilots will be conducted, and when ready, we will announce to the nation in terms of our forward march. Then we are also finalizing a regulatory framework for virtual asset service providers, or what's known as the VASPs. This will bring cryptocurrency exchanges and digital asset platforms under formal oversight, aligning them with AML CFT rules and ensuring that digital innovation supports rather than undermines FX control and monetary stability. It is a fact, colleagues, that crypto is a big thing in Ghana. We can pretend, we can look the other way, but reality is that it's impacting. And so therefore, as the regulator, and together with other regulators such as the Securities and Exchange Commission, GRA, and others, we are joining efforts to engage in regulating that activity and to ensure that the benefits accrue to us while minimizing the risks. A friend of mine said, crypto is like the air we breathe. You can't stop it. It goes everywhere. It takes place everywhere. And so all you have to do is to develop the systems to be able to minimize the risks and allow these to play out. The Bank of Ghana has played its part, colleagues, as I have outlined, and will continue to do so through sound policy, through credible regulation, and through institutional discipline. But sustaining forex stability cannot be achieved by the central bank alone. It must be embedded in how businesses operate, how businesses plan, and how businesses engage the financial system. We encourage export-oriented businesses to reinvest their proceeds locally, not just as a patriotic gesture, but as a long-term strategy for profitability and for resilience. Firms that invoice in cedis or adopt hedged forex positions are not only reducing their exposure to volatility, they are strengthening the ecosystem within which they operate. And such firms deserve recognition and support through access to tailored credit products, FX liquidity facilities, and procurement incentives where possible. Let me be clear, colleagues. The more value we keep within Ghana, the stronger the Cedi becomes. And the more sustainable our macroeconomic trajectory, therefore. And so we want to encourage everyone. Let us embrace the local currency. If you go to South Africa, you have no choice but to use what? The rand. You go to Kenya, you use the shilling. We call it an endogenous variable. It is because everybody is running away from it. Everybody is taking, investment decisions to avoid the Cedi, and therefore the Cedi will be weak. But if we re-engineer our thoughts, and if we recalibrate how we form our projections about the Cedi, I believe the Cedi can be as good as any other currency out there. For us at the Central Bank, we are celebrating the 60th anniversary of the Cedi. There's going to be a launch on the 8th of August, and let me take the opportunity to invite all of you. It will take place at the International Conference Center. His Excellency the President will chair that event. Let's make a statement. Let's make a mark for once. When the first president of Ghana decided to adopt that currency 60 years ago, precisely on the 19th of July, 1965, what he did was right. He meant well. And so we invite all of you to join us. Let's make that bold statement once again. It's our local currency. It is the only legal tender. And so let's uphold that. So finally, as I said, we invite you to partner with the Bank of Ghana, not only as a regulator, but as a co-architect of Ghana's monetary future. We want you to share market intelligence that can improve our forward guidance and FX caution design. I was telling the group we met yesterday that my phone numbers are always open. Everybody has my phone number. If for any reason you need to whisper anything you observe, you want to relay to me, just send me a WhatsApp. I'll pick it up quickly. Because there are things going on and I can't understand. For example, the counterfeiting of our Cedi notes. Apparently, there are foreigners who are doing this, and they are doing it among our own business people. They know them. And yet, people just look away. And I can't imagine how we tolerate that. So if you observe any such practices, please pass on the information, and quickly, we will engage. We want you to collaborate with us in building fintech innovations that support Cedi-denominated payments, credit access, and cross-border transactions. And we want you to join us in piloting and scaling initiatives, talking about the ECD, which has the potential to transform our payments infrastructure, etc. So together, we can shift from a reactive posture to a proactive partnership where businesses help shape the very environment they operate in. So let me conclude. So in conclusion, allow me to once again commend the Graphic Communications Group as well as the BoG Ghana for convening this important forum. Your leadership in shaping national conversations like these is vital to the health of our economy and the quality of our policy making. As we engage in today's panel discussions, I want to encourage all of you to be open, speak up. Open contributions and bold ideas should come. And as I mentioned, my colleagues are here. They will pick up, they will sample all your ideas, and we'll work with them. Let us use this moment to forge a collective strategy for Ghana's foreign exchange future. A future that is built on credibility, built on capacity, and built on courage. So, colleagues, the Cedi is indeed rising. Let us ensure that our country, Ghana, rises with it. I thank you for your attention. Thank you.